let's start with incomplete records. Let's start with incomplete records. Before you begin to solve the illustrations from this chapter, you better to know some other concept also. Predominantly, fifth aspect is a difference. You have to concentrate on incomplete records. Rest of the things are being from the other chapters. So usually you have to study the incomplete records only after the completion of the financial statements as well as financial position. Financial means income statement and financial position statement. After that only you have to go for this. Okay, chapter highlights. Capital account. You might have studied the capital account in financial statement chapter. Similar to that, you can prepare. Calculation of profit and loss. If you prepare a statement of capital, change in capital method like opening capital plus profit minus drawings, that's how you can find out the profit and loss also from the statement of capital. Otherwise, statement of affairs can be followed. And in case of bank and cash account, also be supposed to be prepared, because some missing receipts and payment will be there, so you have to find out that by preparing the cash book. These things are directly not stated in incomplete records, but unless you prepare all these things, you cannot find out some missing data. For that purpose, you have to prepare an income statement. Income statement prepared to determine the net profit or loss, okay, which is similar to the financial statements chapter format. Okay, you can go and refer that chapter. In case of statement of affairs, you have to concentrate on this topic. Statement of affairs is similar to financial position statement, and usually this will be used to calculate opening and closing capital, which is similar to this one. So this statement of capital is nothing but what? Statement of affairs here. Is that okay? The statement of affairs is a base to find out the profit. The statement of affairs itself can be used as a format for finding the opening and closing capital. And of course, you need to understand the format of trade receivables account. We might have studied that in the ledger preparation, debtors and creditors, and to find out some credit sales collections, missing data, no, those things can be calculated, and trade payables. Even you need to know how to prepare assets, provision for depreciation, disposal account. For that, you just go and refer the already you finish up means understanding these chapters, depreciation and disposal of non-current assets chapter, and you have to understand the markup and margin concept also. Also, we have already discussed that in financial statement chapter, and rate of inventory turnover, that we are going to study. This is also about the measures how fast inventory is sold, and useful for problems involving stock movement and efficiency. If there is any stock movement involved, you have to find out what is the opening stock and closing stock you have. For that, inventory turnover ratio may be used. So predominantly in this particular chapter, I am going to concentrate on 10th and 5. Rest of the things you need to have the knowledge over. That's why I listed here. You can go and finish up those chapters beforehand and come to this chapter, so it will be user friendly. Now, calculation of profit and loss. This one. Calculation of profit and loss. How this could be. Capital at the end. From there you subtract the capital at the beginning, and from there you need to add drawings, cash and goods drawings, okay. Any drawings made by the owner, cash or goods, should also be subtracted, and any new capital introduced to be subtracted to find out the profit for the year. Is that okay? This is a statement form. If you prepare this an account form, capital account, how should that capital be? Capital being the liability side item, so opening balance should be, balance brought down should be in the credit side, balance carried on should be in the debit side. If the capital is increasing, show that in the credit side. If it is decreasing, show that in the debit side. When it is increasing, okay, if you are getting any profit, or if you are adding some other investment, further investment, these things will increase the balance of capital. When it draws, it will reduce. When you lose money, it will reduce. So here what happens, we started with what? Capital at the end. We started with this. Okay, whatever it may, to find out whatever it may be, if any item related to this will be subtracted and these two will be added. That's how the statement will appear. We start with the balance. In case of opening capital, it is the other side item, no, so subtracted. Drawings is same side item, no, so added. And capital introduced, further capital introduced, other side item, subtracted. And profit is also other side item, which is the balancing figure subtracting. But same side means it's loss. Okay, you will be getting this. This is the format you have to understand for the calculation of profit for the year. And rate of turnover, for that the formula being cost of sales divided by average inventory. That's what about the rate of turnover. How quickly the inventories are moving can be found out using the rate of inventory turnover. And denominator average inventory, no, that's nothing but opening plus closing divided by 2. That's how we can calculate the average inventory. Hope you'll be now able to understand rate of inventory turnover. Okay, let's now start with the first example. Okay. Now, Shivan makes payments to Gillies from his bank account as well as by cash. Payment being bank and cash, he provided the following information. Prepare account for Gillies as it would appear in the books of Shivan. Shivan books, you have to prepare Gillies. It seems to be trade debtors like. Trade debtors or trade receivables like. Actually, it is not directly related to this chapter. Anyhow, this will be hint to find out some missing data. Or this is the account you prepare for finding some missing data. See, trade receivables account. To find out some missing figures such as credit sales collection, which is required for calculations of any profit or loss under incomplete records. Hope you'll be now able to understand. Now let's try to solve this illustration. So, prepare account of Gillies in the books of Shivan. And as it is being Shivan makes payment to Gillies from his bank account as well as by cash. He provided the following information. Owed Gillies $165 from February. Okay. So we are owing, then it's a liability. We start with here. Opening balance brought down, balance carried on. So automatically trade payables. This is similar to trade payables. If it is increasing, post that here. If it is decreasing, post this here. So initial owing being 165. Paid Gillies, the amount outstanding on his account by check. This amount is paid by check. It reduces the payables to him. Okay, check. And purchased goods on credit from Gillies, list price 150. Subject to trade discount. Trade discount should be always subtracted. 4% on this being how much? 4%. Okay, 150 into 4%. 6 rupees should be subtracted. 144. So purchases should be posted here. Purchases being 144 and payment being 165. Prepare the account for Gillies as it would appear. So you close this to find out the closing balance of Gillies. So 309, and this final balance is 144. Balance brought down. This is 144. Okay. So these are the working notes for the incomplete records. Question number 2. Stella started trading on 1st April 2021. All receipts are paid into the bank and all payments are made from bank. So all these things are routed through bank only. She has not kept a full set of books but has provided the following information. So not kept a full set of books means the books are incomplete. So in incomplete records, some data may be not available. You have to find out by opening the concerned ledger account like trade receivables, trade payables, cash account, bank account and all. Right. What's the first requirement? Record the total receipts, total payments to Stella's bank account showing the cash drawings for the year ended on 31st March 22. Balance the bank account and bring the balance down on 1st April 2022. So let me try to finish up this first of all to find out the cash drawings. Right. So I'm going to prepare bank account. I'm going to prepare bank account. Yeah. So you have to recollect this one from your cash book preparation. Okay. Bank account. Similar to receipts and payment. Receipts. Initially, the capital introduced being 8,000. From it's a receipt side, this is payment side. But don't say this being receipts and payment. It's generally it's a debit and credit. Capital introduced. Capital introduced. You can directly post the total receipts because you can simply write the total receipts and total payments. No need to record all the things one after one. The total receipts being add up these three items 49,000 total receipts 49,000 and you have to find out the drawings. Okay, total payments and drawings balance carried on. Balance carried on. Balance carried on being 2,330. Total payments being summation of these four items 38,870. And if you tally the missing data in this case being drawings, which is 7,800. This is cash drawings. Clear? Here we have found out the cash drawings. In the second question, during the year ended 31st March 22, Stella took goods from the business for her personal use. The selling price of these goods being this one, but her markup is 25. Markup means if the cost is assumed to be 100, with that markup is added, which is 25, and selling price being 125. Here we have been given the selling price 3,375, which is equal to the selling price. So as selling price 3,375, I need to find out the cost. When it is all about goods drawings by the owner, we have to show the cost only. So I have to arrive the cost, do the cross multiplication here to get the cost price of this. 3375 into 100 by 125. Hope this value being 2,700. Now calculate Stella's total drawings. Here this is goods drawings. Cash drawings were already calculated. These are drawings. Goods drawings. Cash drawings we calculated in the previous calculation 7,800. Now the total drawings of the owner here being 10,500. For that you will get 2 marks. Clear? Now we got the drawings also. Stella has provided a list of balances like fixtures and fittings and all balances are there, but capital detail is missing. Now statement of affairs, the statement of affairs is nothing but a normal financial position statement. Okay, the difference between financial position statement and statement of affairs is it's a rough work, like will not follow the complete structure. Just to find out the missing data we prepare. Here capital is the missing data. We have to find out that. We have to find out this. So in statement of financial position, fixtures and fittings being non-current asset, inventory current assets, prepaid rent current assets, balance at bank current assets, trade payables current liabilities, loan non-current liabilities, and you can find out this as a missing information current means capital. So non-current assets, statement of affairs. You no need to follow the complete set, but anyhow I just write non-current assets. Under that we have fixtures and fittings, the value being 10,800, and current assets. Under that we have inventory, prepaid, bank balance. Inventory 2,150, prepaid rent, prepaid rent 500, bank balance 2330, the total value being 4980, total of assets being 15,780, and capital, non-current liabilities. Under non-current liabilities, we have loan repayable in 2027. So more than 12 months. So non-current liabilities 5,000 rupees. And under current liabilities, we have trade payables 1875. The total being 15,780. And this will be the balancing figure. The total of 3 being 15,780 means, what about the balancing figure here? 8,905 will be the balancing figure. We got the capital. Okay. Next question. Calculate Stella's profit for the year ended 31st March 2022. We have to find out the profit. So 8,905 is the closing capital. What is the opening capital given here? 8,000. How can you calculate? For the profit calculation, see. Again, for the profit calculation, this is a step. Okay. So we'll start with closing capital. Or you can remember the capital account format so that very easily you can link. I told you here. Capital account format. This format is more than enough. Even you can open the capital account also. In that way also you can solve. Okay, capital account. Opening capital being bank 8,000 and balance carried on closing being, just now we got the value 8,905. 8,905. The transactions rising the capital will be credited, reducing will be debited. Rising be what? Rising. Profit. What is going to be a reason for decreasing? Drawings. Drawings may be cash as well as stock, even in case of loss. Here, total drawings we already calculated here. Okay. Where is the drawings value? Here is. Cash and goods drawings 10,500. 10,500. And by tallying this, we will get the profit easily. What is the total of this? 19,405 and 19,405. Balance being 11,405 will be the profit. So in the question note, they have clearly stated in the marks sheet. Accept alternate format. Any format you can accept. Okay. So you just see closing capital being 8,905. Drawings will be addable with that 10,500 minus 19,405. Initial capital or capital introduced can be subtracted, which is 8,000 rupees. Finally, you get the profit 11,405. This is the profit. This is also the method. This is also the method. You can follow your own method. That's why I told you studying this chapter will help only after completion of all the other models I have discussed. So here I have given what are the chapters you have to cover before you come here. 2, 5 and 10 are most exclusive for this chapter, but anyhow you can better have the knowledge over other chapters also. Clear? So with that, question number 2 is over. Now, Ben runs a small business but does not maintain full set of accounting records. He has provided the following information. Okay, this is the year end information. This is year beginning information required. Calculate Ben's opening and closing capital. Ben's opening and closing capital. So assets minus liabilities will be your capital. So premises at cost asset, machinery at cost asset, Accumulated depreciation is going to be subtracted from there. Inventory asset, trade receivable asset, trade payables minus item, bank asset, other receivable asset. Okay. Here bank being debit, so it is added. In case of credit, it should be subtracted. If you add all the plus and subtract the minus, the balance will be the capital. This will be opening capital, this will be the closing capital. Yes, come on, tell me the value. All the assets are added, or you can write in a systematic manner also. Okay, this way. Premises 140, 140. Machinery 106 less accumulated depreciation 70. 92 minus accumulated depreciation 82. Inventory 42 and 24,600. Trade receivables 43,400, 39,600. Bank, in one scenario asset, debit means asset, bank credit means liability, overdraft 3,200. Trade payables liabilities minus item, so I post here 24,750. Other receivable asset, other receivable 1,200, 1,650. Asset, liabilities total, the difference between these two is the capital. This is closing, this is opening. I will get 2,59,900 year beginning, 2,59,900 year end, 2,89,900. Okay. Okay. Now, closing capital we calculated here, we can take this as a base to be incorporated here. Okay. And whether the amount of bench transactions shown could be added or deducted from the opening capital. The opening capital being 2,59,900. Is there any capital introduced? Any capital introduced? Okay. I'll keep it pending. I'm not aware about that. That detail is silent. Deducted from opening capital, the closing capital being this one, 2 lakhs. Whatever the information available, you can feed. 2,89,900. I posted the opening and closing. And drawings. Drawings being 620. Goods drawings. This goods drawings deducting the opening balance. So it should be posted here 620. And he also deposited an additional 10,000 cash. I thought it's a drawings. No, it's an additional deposit. Means additional capital. So capital introduced 10,000. Clear? Capital introduced 10,000. Now, opening capital is this one. All the three related adjustments done to get this value. Then all the three put together, what could be this value? Total adjustments. The difference between these two. 30,000 total adjustments. In that total adjustments, deducted from opening capital, I am not sure whether there is any profit or not. We assume there is profit only. Then this side, the value being 320, added deducted, this will be the ultimate value. This plus this is equal to this one means this minus this one. In a reverse calculation, I have to add these two to get this value. 30,620. We need to have 30,620 rupees added with the opening capital. 620 could have been subtracted from the opening capital to get the overall change in the capital being 30. Okay. Drawings, deductible item, not applicable. Okay. Profit, we assume profit for the year, there will not be any loss. So from this, it is very easy to find out this one. Okay. 10,000 plus this one is equal to 30,620 is the total adjustment. Then what could be this balance? Maybe the balancing figure. 20,620 will be the balancing figure. 20,620 will be the balancing figure. Hope you will be now able to understand. I request you to finish off earlier chapters where I have given all the bases. So it's only applications of all the chapters. Once you complete that, it will be pretty easy. Clear? See, if you are getting confused with the table, we have to find out the profit only. No. Ultimately, profit is going to be calculated. No, you just calculate this way. Capital account. Opening balance. 2 lakhs balance brought down. 2,59,900. Balance carried on. 2,89,900. Anything increases the value should be posted here. Decreases should be posted here. What increases? What increases? Profit. Additional capital. Additional capital. Further capital. What decreases? Drawings. Drawings given 620. Profit for the year we have to calculate. Additional capital introduced to being 10,000. So by tallying this, you will get the missing data like 2,89,900 plus 620. This value being 2,90,520. 2,90,520. From the 2,90,520, 2,59,900 minus 10,000. So this profit balancing figure being 2620. Usually we do so, but in this text, in this illustration especially, they have asked the items to be added separately, items to be deducted separately. That's all. And the total of these two will be the overall addition from the opening value. You present the other way, we can get the answer easily, but to make it more tricky illustration, like a new format is given in the question. Clear? Now, one more question also be there. In addition, Ben was able to provide details transaction received and paid. Calculate Ben's credit purchase for the year ended. Credit purchase. Okay. Now, in case of credit purchase, as I already told you, no. What? This one. For credit purchases, if the credit purchases are payment for them, balances if any missed, then you can prepare the trade payables account to get the answer easily. So as you are aware about the format for the trade payables, I go with the trade payables format here. Trade payables. Here balance brought down, balance carried on. Whenever it increases, should be posted here. If it is decreasing, posted here. Okay. Any credit sales, credit purchases will increase. Payment and purchase return will be posted here. Receipts from the credit customers being 4,52,000. This will not come because it's a trade receivable item, but we have to prepare what? Trade payables. For calculating the credit purchase, we have to prepare trade payables. And cash is not required. Payment to credit suppliers. This one, so we can post this 2,24,700. What about the opening balance and closing balance of trade payables? Given here. 24,750 is the opening, 19,700 being the closing. I post that value here. Okay, 24,750 opening and 19,700 being closing. No other information is given, so we assume that purchase return is missing or not available. Finish off calculating, finish up this one to calculate the credit purchases. The total of the debit side being 2,44,400, 2,44,400, and in this case the credit purchases being, and of course there's a drawings, goods drawings is there for own use. The goods drawings will be subtracted from the credit purchases. The total being 2,19,650. In that, drawings being how much? 620. Balance being purchases for sales. Purchases for sales. Or you can post the drawings directly here also, no problem. Okay. Drawings directly here. Drawings with respect to the goods being 620 and this balancing figure being 2,19,030. Carries 3 marks. As already told you, you need to be master with respect to the other chapters, especially financial statements chapter. I have given a comprehensive explanation and the methods also. If you are thorough with that, these chapters are just like that, you can solve, right? Don't come to this chapter directly. Calculate Ben's total sales. In case of total sales, what you have to do? You have to find out trade pay receivables. By using the trade receivables, you will get the credit sales, but total sales means credit sales and the cash sales you have to add. Let me first find out the credit sales by preparing trade receivables. In case of trade receivables, it's being the asset, so balance brought down here, balance carried on here. Now, credit sales will be posted here. Whenever the trade receivable increases, then it will be posted in the debit side, and if it is reducing, it should be posted on the other side. Right, balance brought on and credit sales. And bank, any payment we receive from them reduces the balance. So, those items not recorded, I am going to record. Received from credit customers 4,52,000. So, this is what about the amount received. And cash sales 21,000 here, but it cannot be recorded in trade receivables account. Only credit sales are going to be posted there. Payment to credit supplier is an item of this. I will not record. Do I have any trade receivables in the beginning or end? For that, you can go and refer the particulars here. Yeah, trade receivables in the beginning 39,600, in the end 43,400. The second item will be the earlier year and this will be the latest year. So 39,600 is the opening balance. 39,600. And closing value being 43,400. 43,400. Now, if you tally this, what happens? 4,52,000 plus 43,400, 4,95,400, 4,95,400. Then after subtracting 34,9,600, I will get the credit sales. How much is that? Okay, 4,95,400 minus 39,600. This ultimate value being 4,55,800. But I need to find out the total sales. Here credit purchases, here total sales. Credit sales we got the value being 4,55,800. With that cash sales is added, which is 21,000. Then the ultimate value being 4,76,800. We got this value. Hope you will be now able to understand this one component. Clear? Shiv is a trader. His financial year ends on 31st August. He does not maintain a full set of accounting records, but was able to provide. Not maintain full set of accounting records, then incomplete records. Total revenue 3,20,000 and markup being 25%. If you are talking about the markup, you know that cost, add markup, or profit. Profit will be the markup. Profit. Then you'll get the sale price. In case of 25% markup means cost is assumed to be 100, profit is 25, sale price is 125. The total revenue 3,20,000 here being 125 share, and what about the cost? So the given information, I will try to finish off calculating the cost and profit on this. Right, 3,20,000. So 3,20,000 into 100 by 125, this value being 2,56,000. 2,56,000. This is the cost. Apart from that, we have been given a summary of bank account and assets and liabilities in the year beginning and year end. First, we have been given year beginning, then next year end. Shu had withdrawn 900 for family holiday during the year. Drawings. If nothing stated, we assume drawings in the form of cash. He had included this in the expenses. This amount is included in the expenses. Okay. This one. You can break this into drawings and expenses. Drawings being 600. Balance 33,400 could be expenses. Is that okay? You have broken down into two parts. Clear? On 31st August 21, Shiv decided to create provision for doubtful debts at the rate of 3%. For this, you need to have the knowledge of irrecoverable debt. Go and see that chapter beforehand if you come here. Trade receivable. Trade payables and trade receivables. So you have trade receivables being this much. Okay. For that, you have to create 3%. So provision for doubtful debts on this 3%. 660. 660. Calculate the purchase for the year ended 31st August 2021. So you have to calculate the purchases. For the purchases, what do you have to do? You can prepare trade payables account. Trade payables is the base for calculating the purchases. So I'll put that value here. Trade payables. Trade payables. As you know the format here, balance brought down here, balance carried down here, and transaction increases the trade payables posted here, transaction reduces the trade payables value posted here. Trade payables opening and closing given, so opening being 32,600, closing being 29,600, 29,600. I adjust the space here. Trade payables. And payment to trade payables being 2,57,700. I have to pick the items for the trade payables. 2,57,700. Will reduce the value. 2,57,700. Bank. Is that okay? So we got three values. If you tally, then finally you can get the credit purchases. Missing data like. The total being 2,57,700 plus 29,600. The overall value being 2,87,300. 2,87,300. And after subtracting 32,600, the balancing figure being the credit purchases 2,57,700. 2,54,700. 54,700. We got the balance here. You can either follow this method, trade payables account form, or you can prepare in a vertical form, also be accepted. In case of vertical form, how can you solve this illustration? Okay. Add these two. Closing balance and bank, from there, opening balance subtract, you will get this one. That's all. That way also you can get. So we got the answer for the purchases. Prepare income statement for the year ended. Okay. Income statement. So income statement, you have what? A trading section and profit and loss section. But anyhow, I can prepare that as the same format. Let's see here. Okay. Income statement. Okay. Under the income statement, revenue, revenue will be the gross revenue. From there, you have to subtract the cost of sales. Cost of sales. You have to subtract the cost of sales. Clear? The cost of sales is nothing but you recollect this from the financial statements chapter. Cost of sales, opening inventory, add purchases. Okay, add if there is any carriage in. From there, you can subtract the closing inventory. Then you will get the cost of sales. Let's see. First, we have been given the revenue being 3,20,000. Revenue being 3,20,000. And here we have calculated the cost of sales. This is nothing but cost of sales only. No. Cost means cost of sales for the markup and the margin. So 2,56,000 being your cost of sales. 2,56,000. From 3,20,000, if I subtract 2,56,000, I will get the gross profit. This is the gross profit. I have to try to fill all the other items also if it is available. Now, we already calculated the credit purchases 2,54,000. We assume that there is no cash purchases. The entire credit purchases being credit purchases 2,54,700. I will post that here. 2,54,700. Now, need to have the inventory. Inventory, we have been given the opening inventory being 23,500. 23,500. Now, closing inventory is question mark. As closing inventory is question mark, you can get this value by solving this illustration. Is that okay? 23,500 plus 2,54,700. If you add up these two, the value being 2,78,200. This closing inventory should be subtracted to get 2,56,000. Then what could be this value? This is balancing figure. This value being 22,200. So we got this. From the revenue, cost of sales is subtracted to get the gross profit, which is 64,000. Now with that, we now subtract some other expenses also one after one slowly. Now, very first page, cashiers, receipts from trade receivables, forget about that. Okay. And drawings, this is cash drawings, expenses. In that expenses, 33,400 will be the expenses. Okay. I have to take that one only, expenses. Except that drawings, this value being 33,400. 33,400. Okay. And there is trade receivables, trade payables, premises, all these things are available. And we have been given expenses owing also. Expenses owing. This expenses owing for the year end, if there is any owings at the year end, it should be addable. Is that okay? Other receivables and other payables. Based on that, you have to solve this. So, with that, 33,400, you have to add. What's the value? 400 rupees should be addable. Expenses owing. Expenses owing should be addable. What about the drawings? One second. I have to cross check. Drawings 900. Sorry. This is 900. Okay. I subtracted only how much? 600. No. So I have to subtract 900 for this and balance being the expenses. 3,300. Is that clear? Outstanding. Owing 400 will be addable. So now the expenses for the period being 33,500. Matching principle. 33,500. Find out any other related expenses transferable to the income statement. See, one after one. This will be transferable to the income statement we have posted. Drawings, okay. The drawings can be addable with this, right? So already there is a drawings and here also one more drawing. So 900 plus this one. Rather than showing it separately, you can add with this. And payment to trade payables, equipment, these are the assets. Trade, inventory at cost, trade receivables, trade payable, this is already included. Equipment, premises at cost, everything is okay. Not related to any expenses here. And Shiv decided to create provision for doubtful debts, 3% on trade receivables. How much trade receivables we had? 22 on that 660. Provision for doubtful debts should be created. 3% on trade receivables. No, this one is the opening value. Opening value, you forget about that. So we have to find out the closing value. On this, you have to find out the 3%. PDD, provision for doubtful debts, and the closing value. Come on. 25,900 into 3%. How much you are getting? 777. So this provision for doubtful debts, we assume that we don't have opening. We created completely this period. That entire PDD is new creation added or increased 777. Okay. Now cross verify whether there is any depreciation. Equipment at net book value. Okay. Do you have any depreciation? This is year end value. See, equipment costing rupees 16,000, you know. Year end you have how much? 12,800. 16,000 becomes 12,800 means 3,200 rupees worth equipment value decreased. Then it can be assumed to be the depreciation. It can be assumed to be the depreciation. Depreciation also be posted in the expenses section. Okay. Depreciation on equipment. This value being 3,200. No other expenses we have, so you add the three expenses, 37,477. If you subtract this from 64,000, 26,523 will be the profit for the year. Profit for the year. Okay. Clear? Hope you'll be now able to understand this. That's all, not more than that. But anyhow, solving this illustration with my expertise seems to be pretty simple, but I'll show one more illustration on the chapter comprehensively subsequent later while solving the independent past year's question paper. Here I am guiding you the concepts. So I am going to skip that part here. That part you can link along with your past year's question paper working session, right? Clear? Move on to the next illustration, question number 5. From this question number 5, what we have to do? We have to prepare income statement and capital account. While preparing the capital account, you balance this and bring down the balance down. Okay. So income statement and capital account only. Clear? So let me solve the income statement here and capital account here. Right. I will prepare capital account as an account format as it is being the account. Income statement. Income statement. Right. Lionel started trading on 1st July 22. He paid $15,000 of his own personal money into the business bank account. So this is the capital amount introduced in the very first day. Okay. Any amount increases the capital contribution will be credited. If it is reducing, it should be posted here. So bank first investment made, the value being $15,000. He did not keep full accounting records but has supplied the following information. Cash sales 90,000 were made and paid into the bank. No other money was received. Lionel marks up his goods by 50%. Means if the cost being 100, your markup being means profit being 50% on this. Whenever markup 50% is given, cost means cost of sales. It's not purely cost of material, it's cost of sales. Opening stock plus purchases minus closing stock will be the cost of sales. Even in case of carriaging, that should also be addable. Any direct wages also be addable. So profit being 50 rupees and your sale price being 150. Here 90,000 is a sale. Then what could be the cost on this? Cost on this and profit on this. 60,000. You can do the cross multiplication. This is 60, this is 30. 90 into 100 by 150, 60 is the cost of sales. The difference between these two is the profit, which is 30. We got this value here. Purchases of motor vehicle, van 8,000 rupees. Payment to credit suppliers 55,000. Wages. Wages will be expenses item. Okay. Profit and loss expenses item. General expenses, profit and loss expenses. Rent and insurance, profit and loss expenses. Motor expenses, profit and loss expenses. Cash drawn from bank. It's the drawings. Drawings, we prepare the capital account. No, it reduces the capital balance. So here you put the value being drawings, bank. This value being 14,600. Okay. Purchase returns amounted to rupees 3,000. Inventory at 30th June 23. This is the year end inventory. So here revenue. There is no any credit sales like, so we assume that the entire 90 being the revenue here. Minus cost of sales. Cost of sales. Remember, the cost of sales is nothing but opening stock plus purchases minus closing stock. But this is a newly started business. Definitely we don't have what? Opening stock. So you can start with the purchases less return, if any. Purchases less return. Purchases in this case being information is silent. Okay, purchases information is silent. But purchase return being 3,000. 3,000. If I know the purchases value, I can simply subtract. The 3,000 can be subtracted from there. I am now not available that. And from there, they have to subtract the closing inventory. Closing inventory. That closing inventory detail is given 4,175. 4,175. And naturally, your gross profit being 30,000 already we calculated. We can put that value here. The difference between these two is the cost of sales, which is 60,000. In that 60,000, 4,175 being closing inventory means purchase less return should be 55,825. Am I right? So balancing figure 55,825. No, minus means plus, So this is, I make a correction. 64,175. From here, you have to subtract this to get this one. In a reverse case, 60 plus this one will be the purchase less return. Purchase less return 64,175 means before return what could be the purchases? Minus item. After minus, this means you do the plus, you get this value. This value being 67,175. Balancing figure number 2. Balancing figure number 1 and balancing figure number 2. And this is also third. Clear? That's how you can get. And from there you can subtract all the expenses. Okay. What are the expenses we have? Wages. 80-60. 80-60. 1/3 of motor expenses, or is there any other adjustments related to that? So let's finish up this. Purchases recorded. Inventory recorded. 1/3 of the motor expenses paid were for Lionel's private car. So 1/3 is Lionel's private car means for the business purposes only 2/3. Only 2/3 can be taken. So motor expenses. 2/3 on 4,992 being 3,328. 3,328. Okay. And a full year's depreciation at 25% is to be charged on the van using the reducing balance method. So depreciation on van. We have to calculate for the full year's depreciation. 8,000 rupees. On that, you have to find out 25% directly. This is the first year. Reducing balance and straight line method of depreciation will be the same. 25% on this being 2,000 depreciation on van. I can cancel this. Lionel withdrew 1,000 each month from the business cash for personal use. Okay. From 1st July to the next year, per month 1,000 means for the 12 months 12,000 rupees withdrawn. Okay. 12,000 withdrawn. Clear? Now what about that 14,600 from where? Cash drawn from bank. Okay. Then it is assumed this cash drawn from bank assumed to be for official purpose. Contra. Because there's two drawings, right? So I'll put this 12,000 being one of the drawings here. Be careful with that. Okay. So cash withdrawn from the bank may be for official, may be for personal purpose. So here it is assumed for the official purpose. Right. The remaining cash drawn from the bank was used to pay wages. Okay. Out of 14,600, out of that 12,000 is for the drawings. Balance 2,600 is for payment of the wages. Payment of wages. Already there's a payment of wages 8,060 and amount drawn. This is the payment through bank. Withdraw, and after withdraw the cash you have in that cash 12,000 is taken by the owner, another 2,600 is used for paying the wages. So wages value being, you have to add these two. How much is that? 10,660. 10,660 is the wages. And wages completed. General expenses, no information given, so we can directly subtract this here. 1,140. Rent and insurance. Rent and insurance. This value being 5,585. Motor expenses already taken. What more? I think only 5 items. If you total this, the value being 22,713. If you subtract this value from the gross profit, your net profit for the year being 7,287. This is profit for the year. Profit for the year. Profit for the year will increase the owner's capital balance. I post that value here, 7,287. So if I tally, then I will find out the closing balance carried on. 15 plus this one, 22,287. 22,287, and the balancing figure here being 8,000. Okay. Do we have any more drawings? Let me cross check. I think purchase return. Once again. See this one 2/3 no business, another 1/3 being assumed to be the personal expenses. This value being 4,992 into 1/3. This value being 1,664, also drawings. Now if you tally, then you will get the closing balance 8,623. Balance carried on. Balance carried on. Clear? With that, this illustration also we completed.